Howdy, howdy. Another subscriber requested company here. It's PHX Minerals. It's a US company situated in Oklahoma City, in Oklahoma. And surprisingly, it actually has only 20 employees. So it's a very, very small company, at least in terms of its employee count. Now, the beta of the company is lower than the market or the stock market beta, so this means that it doesn't move that much. That's also very interesting to take a look at. But we're going to do our usual thing and examine the company's financials, see whether this kind of $2.99 $3 company is worth adding to our portfolio. Now, it's actually down 31% from its last 1 year, and the last 5 years, this has been the price action. It's kind of in sort of like trading sideways for a long time here, for a long, long time. And typically in terms of trading, this generally tends to be a good sign, this kind of basing action, it's called in terms of trading again. But if I was a trader, I would potentially look to maybe buy it at some point, try to identify where there's going to be a key jump point based on the company's, the stock's resistance levels or support levels, and kind of play that. But if we're talking about buying the company for the long run, then we have to take a look at the financials. And you have to remember that these kinds of companies can be very, very cyclical in nature. Anything that has to do with minerals, gold, silver, and all these things can be very cyclical. And before we proceed, I wanted to show you a company that I recently traded very successfully. I made a lot of money out of it. And the reason why I'm showing you this, and I will make a separate video about it, is because it's a high cyclical company. Again, if you take a look at the 3-year period, it's like up and down, and 5-year period, look at this, up, down, up. It's very, very cyclical in nature. These kinds of companies are my thing. I like those because I can buy cheap and take a little bit of a risk and make a lot of money. And I actually bought around these levels. I bought at 8. I think I bought about here. Yeah, this is where I bought back in 2020. And so I gained quite a lot here. And again, it's about the cyclical nature of a company and also finding a company that doesn't have like a lot of debt. It's still making money. So we're not talking about just buying a company at the low levels because it's at the low levels, but because you identify that it's a cyclical company, that it has reserves, cash reserves, it has good growth potential, and also you may be potentially willing to take a risk of even losing money just to potentially make a lot. And this was a multi-bagger for me. So, as you will see here, the P ratio of X, for instance, right now is 2.54. So we're still talking about a great company here, although they have been massively diluting investors lately, I suppose. But regardless of this, you are looking at numbers that look very, very efficient here. And whether I'm buying at these levels is going to be a topic for a completely different video, because I want to jump back to our original company here. And we will discuss about it. The reason I brought it up here was just the point that I wanted to make about the cyclical nature of these kinds of companies. The fact that they go up and down a lot, and so just by being patient, you can get a good price and lock it for a while and wait while the cyclical nature of the company brings you to profitability, really. So yeah, worth noting. Now for this one, this is not the exact same pattern. As you see, it typically goes down. It hasn't had a cyclical nature, although you would expect that from a minerals company. And probably the reason for that is the fact that the company has been losing revenue, has been losing net income in terms of growth, and has been losing 5-year free cash flow as well. So it's not doing very well in terms of its financials. And you also notice that it's a very, very small company here. We're talking about 100 million market cap. It's a very, very small company. I mean, the shop next to you could be actually having a larger market cap if you're living in the US at least. So a very high P ratio and a negative price to free cash flow ratio. So they make some net income, but they are losing free cash flow. And they are massively diluting investors as well, from 17 million here to 34 million. This is how they are funding their operations. And so this kind of company, just by looking at these financials and just these metrics here, and this is why I love this kind of table here, it would be a no for me instantly. I wouldn't buy this company unless, again, I was trying to buy it for a base breakout, as we call it in trading. but I wouldn't buy it for a long-term hold here because I just don't see anything, not even a cyclical nature here, that would potentially have me buying the company and wait on it. There are other ones that can do much better. Now that doesn't mean that it won't do better, because who knows what's going to be happening tomorrow. But we're going off of the financials that we see here, and that's the whole point. And the returns are also pretty terrible here. And look at this one, dividend yield 1.5%, which is 140% of its dividend payout ratio. Horrible. They will have to cut down on dividends eventually, no doubt about it. They will probably bring it to zero. And you will see that they actually already cut down on dividends from 6.47 to 1.5 right now. And they will have to do more of it because they're still paying a lot based on their net income. So you'll see all this and how this kind of really helps you get a complete view of what the company is doing just by looking at a few financials here. Very cool. And yeah, just by looking at this, basically, I wouldn't buy this one for sure. And again, you'll see here revenue growth that is in the negative, net income growth that is increasing, yes, but it's still in the negative. And what can you even do here? All these values are negative, all the margins are negative. It's only the free cash flow margin that is positive in some cases here. And I'm assuming that this has to do with adding back values like depreciation and amortization and stock-based compensation, the typical thing. Look at this, the depreciation and amortization is 7.7 million, which is more than the total cash provided by operating activities. So it's horrible. Yep. So not much more to say about this one. I wouldn't buy it. I just see a lot of risk here, and nothing works the company's way so far. Again, maybe it can work for a trade, but it's very risky. And frankly, I would potentially think for a short play for this one, maybe. Although I don't like trading companies on a short when they have been battered down so much. Regardless, I mean, again, anything could happen in terms of the trading side, but in terms of financials and in terms of the long side, I'm out here from this one. So, thank you for watching the video and thank you for the suggestion. I hope you enjoyed this one. Soon I will be making a video about X as well, which is gonna point to a much different story in a different company, and I will kind of explain how you can make money out of this sort of like cyclical patterns that you can find around many companies, and X is one that I love myself. It's one of the companies that I have used in the past and keep on using and milking whenever I can. So, thank you for watching this one. Please leave a like if you did enjoy. I think the content here was very interesting and can give you some ideas especially about cyclical companies. And if you did enjoy this video, remember to subscribe, because at some point you will be able to do this analysis and just very quickly analyze a company when you will gain access to this tool that I'm working on right now, and it will be ready in probably a couple of months. So yeah, stay around, and thank you for watching this one. In the meantime, take a look at this video that I made earlier, and it talks about basically the pharma stocks, and we're examining an Indian company in this one. So take a look at it, and you can compare it with other ones like Canopy, for instance, or Tilray, and make your decision. So again, thanks for watching, and I'll see you soon. Bye bye.